I'm Rick Kaler. Thanks for joining me. I spend a lot of focus helping my clients protect their hard-earned assets from the reach of a frivolous lawsuit. The chances of such a lawsuit in the U.S. is always a risk when a person with a nest egg is perceived as rich and someone who could afford to shell out big bucks to make an unfounded lawsuit go away. As devastating financially as a frivolous lawsuit may be to one's wealth, it's nowhere near what I consider the number one potential destroyer of financial wealth, which would be divorce. I think this is especially true for older couples. A divorce later in life is far more impactful financially than one early in life when there often isn't much in the way of acquired wealth to split. When couples divorce in or close to retirement, each spouse typically faces a loss of 50% of their assets and annual income and a 50% increase in their expenses. That's the worst of both worlds. As a general rule of thumb, retired couples that have been married for over 10 years or who are older than 50 can expect to split the assets, with each taking away 50%. It's not hard and fast, but it's a pretty general outcome. So that immediately halves the available income to each spouse. For example, take a fictional couple, both retired, who have jointly owned assets worth $2 million that produce an income of $60,000 a year. Once divorced, they will each have $1 million in assets, 50-50, and that $1 million will give each of them $30,000 a year. Other income would probably also be split, with each spouse having to depend on their own Social Security and any separate pension income. In cases where one spouse has the majority of the annual income stream, it's not unusual for a judge to require that alimony be paid out to equal that disparity to the other spouse. Now, all this would be fine financially if expenses would also decrease by 50% and lifestyle remain the same. But that is not how it works. The biggest cost is the increase in housing. Now, instead of two living as cheaply as one in a home or an apartment, there are two residences to support. That means two mortgages or rent payments, two sets of utility bills, two cable and internet charges, and twice the maintenance and the upkeep. Travel's another item that becomes more expensive, as it's no longer one hotel room or stateroom on a cruise. Although I would say when you look at it, my experience is that the cost of living increases are 25 to 50% more for two separate households. Now let's go back to this couple and assume that they receive $24,000 or $25,000 annually from Social Security for a combined income of $50,000. This is why they're married. And if we add that $60,000 from their $2 million, that gives them a total income of $110,000. Let's just assume that federal and state tax liability is $12,000 and they live on a net of $98,000. So, once they're divorced, we have that 110 and their income falls to $55,000 each. But now that they're single, their marginal income tax brackets actually rise. It wouldn't be unusual for their federal and state taxes as individual filers to be, say, $7,000 each. Coming off to $55,000, that leaves them $48,000 on which to live. Let's assume their pre-divorce living expenses of $98,000 increase by only 25% to $122,000 total. So we split that in half. That means each is going to need $61,250 to maintain their standard of living. Well, that's $13,250 more now than their income. Put another way, they're going to need to cut their expenses by almost 22% to make ends meet. And that means a decrease in the standard of living. And that's the best case scenario. If costs increase by, say, 50%, each would have to reduce their expenses by 1/3, 35%. Now, consider what your anticipated retirement lifestyle would look like on 22 to 35% less income. Think about what your current standard of living would be if you had to cut it by 22 to 35%. The answer is not a pleasant picture of one's golden years. This is why couples planning for retirement are wise to invest in their relationships as well as their portfolios. Thanks for listening.